Hello, welcome to European Open Briefing for Monday, May the 7th. I'm Rafi Boyajan, currency analyst at XM.com, and we're going to be having a look at the latest developments in the currency markets today. The US dollar has hit fresh highs despite the rather mixed jobs report we saw out of the US on Friday. The yen is being supported this morning by some risk off, mainly on the back of EM currencies, emerging market currencies coming under pressure. The euro and the pound are also sluggish against their US counterpart. Oil prices in commodities have risen to near 3.5-year highs, mainly on the back of concerns about the US pulling out of the Iran nuclear deal. So let's get started with the US dollar. We can see in the chart the dollar index. It actually rose to a 4-month high of 92.90 on Friday following the US jobs report. The US actually fell against the yen, but it rose against the euro and the pound. So that's why the dollar index managed to reach those fresh highs. This morning, it did fall back before starting to climb again. This morning it's currently trading around 92.70, not far away from Friday's highs. So the jobs report was somewhat disappointing. We saw the US economy adding less jobs than expected in April, and wage growth also missed expectations. We saw average hourly earnings rising by 2.6% year on year versus forecast of 2.7%, though we did see the unemployment rate falling to an 18-year low of 3.9%. Expectations were 4%. So this means that the Fed will likely stick to its gradual rate hike path and is unlikely to turn more aggressive in the near future. Despite that, the fact that the Fed isn't about to raise rates more aggressively, the US data is still more strong in comparison to other advanced economies. So the jobs report was overall seen as fairly solid, and that's what's supporting the US dollar. The next focus in terms of US data will be inflation numbers coming up later this week. Let's now look at dollar yen, because dollar yen actually hasn't managed to match those peaks from the middle of last week when it briefly rose above the 110 level. It actually slid below the 109 level after the jobs report before rebounding to around 109.30 this morning. So there is some risk of that's supporting the Japanese currency this morning. So we've got the uncertainty about trade, those talks between the US and China, when the US delegation traveled to China on Thursday and Friday. Those talks didn't lead to any sort of breakthrough. We also have uncertainty about what's going to happen with the Iran nuclear deal. President Trump has until May the 12th to decide whether or not he wants to renew that deal or whether he wants to pull out of it. If he does decide to pull out, it would mean the US reimposing sanctions on Iran, which would include Iranian oil exports. We're also seeing some emerging market currencies, particularly the Argentine peso and the Turkish lira, coming under intense selling pressure. So that's raising some uncertainty about the outlook for emerging market economies, and in turn giving some support to the Japanese yen. We didn't see much of a reaction to the Bank of Japan policy meeting minutes coming out of Japan earlier today. Those were for the March meeting. We are in fact going to see the April summary of opinions coming up later this week. Those will be much more important. Let's look at the European currencies now. We can see the euro and the pound perhaps showing some sign of stabilizing somewhat against the US dollar. The euro slumped to 4-month low 1.1909 last Friday after jobs report. It managed to rebound before turning lower again. It's come under pressure this morning from disappointing German factory orders. So German factory orders have now fallen for the 4th straight month in April, further fueling doubt about the strength of the Eurozone recovery, and in turn about how quickly the European Central Bank will wind back its stimulus program. Sterling is also struggling. It hit a fresh 2018 low 1.3485 against the US dollar. We've got the Bank of England policy meeting on Thursday. So bank had been expected to raise rates until we saw a series of disappointing data out of the UK. So those expectations have now been reversed. So the market consensus is that the Bank of England will keep interest rates unchanged at 0.5%. But it's also going to be important what the bank will signal about future rate hikes. There's been perhaps some comfort on the political front, where the UK Conservatives did better than expected at local elections on Thursday. But we do have a lot of uncertainty about whether or not the UK will remain in the customs union post-Brexit. So that uncertain outlook about what the UK will decide in terms of a customs union has also been weighing on the pound, in addition to those receding rate hike expectations by the Bank of England. Let's now turn on to the commodity-linked currencies. We can see the Australian dollar attempting a rebound against the US dollar last week. If you recall, the Aussie slumped to an 11-month low of 0.7470 against the greenback. It's now back above the 0.75 level. We did see positive business confidence data this morning coming out of Australia. The NAB Business Confidence Index rose strongly in April. We've got retail sales coming up out of Australia as well tomorrow morning, so those also will be watched closely. The Canadian dollar is also looking somewhat steadier, although on Friday, dollar loonie did spike to a fresh 1-month high, 1.2970. It didn't manage to hold to that level, though it quickly fell back, meaning that resistance level around the 1.29 level is still holding fairly strongly. We're seeing the loonie firm to around 1.2860 this morning. It's going to be a crucial week for NAFTA. We've got US, Mexico, and Canada continuing their talks in Washington this week, where they will try to break that impasse over the highly sensitive automobile sector. So depending on how the talks go, we could see some volatility for the loonie as well as the Mexican peso later this week. And finally, let's take a quick look at oil prices. We can see oil prices surging ahead. That's mainly on the back of expectations that President Trump will not renew the Iran nuclear deal when the deadline nears on May the 12th. We're seeing European countries trying to have President Trump change his mind, but it's highly uncertain what President Trump will decide. If the US does pull out of the Iran nuclear deal, we will likely see fresh sanctions on Iranian oil exports. That would lead to big drop in oil supply. We're also seeing Venezuelan oil output also falling as the country continues to face a severe economic crisis. So underinvestment in Venezuela's oil industry has significantly hurt oil production in the country. So all of that we're seeing is pushing oil prices to fresh 3.5-year highs. WTI broke about the $70 a barrel for the first time since late 2014. Brent crude has hit $75.89 a barrel. That's it from me. Before we go, let's have a quick look at today's economic calendar. The main data is the Eurozone Sentiment Index that's due shortly, as well as a number of Fed speakers. Thank you for watching and have a great day.